Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hahn, the non-fawn of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. That certificate's not sponsored by the radio station, but by Tanbella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is entertainment. Nam, we don't have any guests today, but you've got a couple articles you want to share.
Yeah, I have a residential real estate article that came out this week. Inventory is way down from last year, and I know whenever we have Patty Cohen on the show, we grill her on what's going on in residential real estate. She's not here this week, so I thought I'd grill myself and this article. And its inventory is way down. We've known this. I mean, we've been reading about this and talking about this on the show, but just to give you some numbers. It says, well, let me start with the article. It says, since the start of the COVID-19 pandemic in March, there have been nearly 400,000 fewer homes listed than the same time period in 2019. And what's neat about this article is they give a breakdown by cities in the United States, with San Francisco being down 14% inventory. And when I say inventory, it's the number of available listings in the marketplace at any given time. And in San Jose, it's almost 30% down.
Wow.
Los Angeles, it's 29% less than it was this time last year. So essentially, you've got this housing market right now that's been booming. And we'll talk a little bit about on the loan side what kind of effect we're seeing. But couple that with just people not putting their homes on the market for whatever reason, for a number of reasons, and you're just seeing the available homes being snapped up. So the number of days that homes are sitting available has dropped considerably over this time last year as well. So it's just, again, a frothy market. When we get into the deals of the week, you know, a lot of these deals we're seeing are just like ones that we would normally talk about in the spring. Because, you know, real estate generally has 2 markets, spring and fall. Summertime and you know, wintertime are certainly have their, you know, activity, but typically you either list in the spring or you list in the fall. And right now, with the kind of bridge loans, the kinds of loan scenarios we're getting, it feels just like spring. And we're having a record, I think, few weeks or several months. So
it's the residential real estate market in California has caught a lot of experts, and when I use the term experts, I'm talking about people that we respect, that we consider to be experts, that we follow and listen to. And I was reading a transcript from a recent interview from a very well-known California real estate investor who basically at the beginning of the year was predicting that California real estate prices would be down about 5% for the year. He thought that we had reached a peak and that, and this was pre-pandemic, thought real estate prices would go down. And here we are, you know, at the end of the 3rd quarter, and real estate prices are up in most markets in California, and they're up 10% nationwide. It looks like the biggest surprise is that unit sales, even though inventory is down right now, and what goes on the market seems to get snapped up pretty quickly, unit sales should actually be higher in 2021. In 2020 should exceed 2019, and so that was just, you know, that's the surprise that a lot of experts are seeing. There's this disconnect between what's happening in the general economy thanks to COVID. Like, for example, this morning on my news feed, I'm reading how it's even worse for the airlines, or looks like it's going to be even worse for the airlines than we predicted. And you could probably substitute restaurants, movie theaters, you know, a lot of different businesses for for airlines, and say it's going to be a lot worse for many, many businesses than we ever dreamed of. Because here we are 7 months into the pandemic, and even though they're starting to open up markets again, you know, I'll just use my family as an example. You know, nobody wants to go anywhere. My wife still is not willing to go inside a restaurant to eat until there's a vaccine. And that's the way a lot of older folks who spend their money, a lot of us boomers feel that way. So, you know, there's just, so in that backdrop of almost horrifying and catastrophic economic news for many, many industries. You've got the residential real estate industry and the mortgage industry both on fire. Anybody involved in those, whether you're an escrow officer, an insurance agent, a real estate agent, a mortgage broker, you've never been busier, and you probably haven't taken many days off. I know I haven't taken a vacation day really in 2020 because there's nowhere to go. So residential real estate is very strong in California and nationwide. Prices are up, homes sell quickly. There's a lot of competition, and there's rent relief for some people in major cities like San Francisco. But anyway, I've got some nuggets here we'll share in the next segment about just how strong residential real estate is in California right now.
And for vacationing, camping seems to be a big thing. And our friends at the Lighthouse Resort are very busy. Okay, here's our first trivia question, entertainment. Who played the mermaid Madison in the 1984 film Splash? If you remember, I think it was with Tom Hanks, if I'm not mistaken. All right, call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. Again, here's the trivia question. Who played the mermaid Madison in the 1984 film Splash? All right, stay with us. You are listening to The Best of Investing, and we are going to be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hunt and Nam Phan. Our first trivia question was, who played the mermaid Madison in the 1984 film Splash? Nam, you think you know the answer?
Daryl Hannah.
Daryl Hannah, yeah. It's kind of I've never known a woman named Daryl, but yes, that is correct.
You know how she got her name in that?
What's that?
You know how she got her name in that show, in that movie?
No.
Well, he asked her, they were walking down the street in New York, and she saw the street sign that said Madison.
Oh, is that right?
He said Madison. Yes.
You
got to watch that movie. Edward's never watched that movie.
I know. I've got to see that. Hey, before we go on, I do want to make a mention here. SeaTrek is open for rentals for trips and classes, even with the COVID going on, because they have their policies in place. So you can spend a day or evening kayaking with them on the protected waters of the San Francisco Bay. They have professional guides who can take you on a number of routes around the Bay Area. They have single and double kayaks, lightweight paddles, comfortable life jackets, and in addition, they also have stand-up paddle boards. But reservations are required, so go to seatrek.com and start your adventure. All right, Nam, take it away.
Yeah, it was just in the last segment we were talking about available inventory, and I gave you a couple of markets in California, and those were major metros, really, so San Francisco and Los Angeles. But for some smaller markets, it's really interesting to see the available inventory drop. For cities like Boise, Idaho, it was 39%. For Salt Lake City, it was 56% less, fewer available homes. Sacramento, 51%. Spokane, 48%. Spokane, Washington. So there's a huge demand in these secondary markets, these smaller markets where people are actually moving to. So this real estate market not only is happening in the Bay Area, but I imagine some of the outflow, people are moving, or maybe they're buying second homes in some of these smaller markets to get out of the major metros. So really interesting what's going on.
Yeah, it is. It's, talking about, again, residential real estate market in California, and we like to talk about that on this show because the sponsors of this show, Pacific Private Money, is a specialist in the residential lending marketplace. We provide alternative financing options for people, for California residents, mostly in the residential real estate market. And it's not that we set out to be initially to focus on residential real estate, because we're really, at the end of the day, agnostic as to what type of real estate we would lend on. But it's just so happens that there's a stronger demand in California for alternative financing for residential real estate versus commercial and others. And I'm actually quite glad, given what's been happening, no thanks to COVID, in the commercial real estate market, which is getting hammered. Retail, office, industrials doing pretty well, but retail and office have been pretty have had a tough go at it. Even multifamily. So we've been very fortunate at Pacific Private Money that we've ended up largely thanks to demand and largely thanks to chasing markets that were underserved, like the consumer bridge loans, that we found ourselves at 80% of our portfolio and 80% of the loans we generate at Pacific are residential real estate related. And why that's even important to someone listening is that we use private capital to fund all our real estate loans, and so we've funded over $750 million worth of loans, most of that just in the last 5 years, and we're on pace to do about $200 million just in volume in the next 12 months, based on our current volume. And that private capital comes through a number of different investment opportunities that we offer investors. We've got 4 different mortgage pool funds, and we also work with individual investors and individual TDs. So we're really bullish on residential real estate in California, and we're thrilled to see that marketplace is still remaining very strong because we lend against it. We do 70% or less loans at Pacific secured by residential real estate, and since we use investor capital, their biggest concern typically is preservation of capital, as is our concern. So we really appreciate the fact that California real estate has weathered this crisis fairly well, although we are mindful that home prices even higher today than ever before could potentially be in for a correction. And so, which is why we don't do 80, 90, or 100% financing. We do 70%, 60%,
Exactly.
65%. We leave ourselves some protective equity. So we are very much here at Pacific Private Money and on the Best of Investing. We're really plugged into the California residential real estate market, the California residential mortgage market, what's happening in mortgage investment markets throughout the state. And we share, of course, on this show and on our webinars, the now 4 ways to invest, actually 5 ways to invest, 4 funds, and our trusted marketplace, which is at privatemoneyloans.com. So again, really important for people who are nervous about the stock market. I mean, I was just looking at this show does broadcast on Saturday, but we're recording on Thursday this week, and the S&P had a day where it was up, then it was down, then it was up, then it was down. It was below the line, above the line, twice, both directions. It's like that's no way to invest. That's stomach churning. And so we'd like to think that we provide opportunities for investors to earn extraordinary yields, starting at 7% and going up from there up to a target yield of 12% on one of our newest funds, the Southwest Note Fund. So there's an awful lot of opportunity to invest in California real estate without actually having to go out and buy real estate, because good luck trying to buy it right now with all the competition out there and the low inventory, right? But you can be an investor and profit nicely on investment opportunities secured by California real estate. And for more information, please visit our website. We're constantly adding more materials to our website, especially since we've launched 3 new funds in the last 90 days. So go to pacificprivatemoney.com and click on our Invest tab, pacificprivatemoney.com, click on the Invest tab, check out our Pacific Private Money Fund, our North Star Capital Fund, our Freedom Fund, and then our newest Pacific Southwest Note Fund, which we're very excited about. And we'll talk a little bit about each of these funds in a little bit more detail in the next segment.
Very good. All right, let's cut to our next commercial break here. Trivia question is, we're talking entertainment here. What was the title of the TV series MASH theme song? Remember, they didn't sing it on the TV show, but they played the music, right? The theme song from MASH from the 1970s. What was actually the title of that? Yeah, exactly. That's it. Okay.
There's a name for that song.
What's the name of that song? All right. Email Edward, or excuse me, you can call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. And stay with us because you're listening to the Best of Investing. When we come back, We have an email question that comes in asking, what is a loan loss reserve and how do you handle it in your fund? All right, don't touch that dial. The Best of Investing. I'll be right back. Welcome back to the Best of Investing. Edward Brown here, along with Mark Hanf and Nam Phan of Pacific Private Money. Second trivia question. Entertainment was the theme. What was the title of the TV series MASH theme song? You remember the tune, right?
Yeah.
Suicide is painless. There it goes. Suicide is painless. It brings on many changes. Okay, that's an old song. So Nam and Mark, an email comes in from a listener that says, please explain a loan loss reserve in your fund. Mark, you want to tackle that, or?
Sure. So I could tell Nam was chomping at the bit to answer that one.
Yeah.
I'll let him. You got something good for after this. So first of all, a mortgage pool fund is a very typical investment vehicle offered by companies such as Pacific Private Money. It provides them a way to pool capital from many, many investors together into one LLC. And this is a type of security, basically, that is very common in real estate. You could also raise capital with the same type of format to purchase real estate or develop property. We use this so-called 506 Reg D format to raise capital in an LLC to lend out. And so I mentioned in the last segment that we've got 4 of these now. We've had our legacy fund we established in 2013, and it has currently $62 million of assets under management, mostly real estate loans. And then our other 3 funds they were all launched this year, and they're in varying sizes, all under $5 million at the moment. But those what's common in these types of funds that are particularly funds that are used to make real estate loans is that a so-called loan loss reserve or loss reserve is created on the balance sheet, basically in case there are any loan losses in the portfolio. And how a loan loss reserve works is basically, usually on an annual basis, we'll meet with our CPA and our fund administrator, and we'll look at various expense accruals that we estimate for the year. So we'll create a budget. So we'll budget for the CPA, we'll budget for the audit, we'll budget for any other state or local fees that we have to pay on behalf of the LLC. And then the final thing that we'll estimate is we'll take a look at how much we want to set aside of the earnings for a loan loss reserve. And it's actually fairly typical among fund managers to have a 0.25% or also 25 basis points of income. So let's say the returns for the year were 8% gross. The net returns to the investor might be 7.75%, because we took 0.25% and applied that to the balance sheet, essentially a balance sheet entry to create a reserve. So right now, I think we've got, we're using 25 basis points on the Pacific Private Money Fund. Other funds during the pandemic, I've heard, have increased their loan loss reserve in anticipation of losses. We did not, because in our portfolio, we looked at our portfolio and we do not anticipate any loan losses in the reserve. But it essentially, the loan loss reserve takes a small portion of the distributable earnings and sets it aside on the balance sheet and does not distribute that to the investors. Now, the investors get a K-1 at the end of the year that does reflect what they received plus any loss reserves that were held back. So there is a small cost to the investors to be in a fund that has a loan loss reserve, but most funds have a loan loss reserve, and most funds are operated that way. So it's essentially what we call a best practice. It's a best practice to maintain a loss reserve, and to date we've not needed to dip into our loss reserve, so it continues to grow on the balance sheet and is available in case there's an unexpected loss. But to date we have had 0 loan losses in the Pacific Private Money Fund. We've had 0 loan losses, again, across our portfolio. So we've been very fortunate in our lending practices such that we've not had a loan loss since 2008.
Very good. And how do people get a hold of you if they want more information?
For more information, go to our website. Our phone number is on our website too, pacificprivatemoney.com, or call us 415-883-2150, 415-883-2150 for more information on our fund structures, investment opportunities, or if you're a real estate professional and you have a client that could benefit from a very fast closing bridge loan to help them buy that next property.
Very cool. And Nam, you had mentioned off air that people were having questions about how the fires were affecting.
Yeah, so, and I'll start this, and if we need to go to the next segment to cover it, happy to do so as well. So, with all the fires that have been going on, people from time to time, our investors want to know if our portfolio, specifically the Pacific Private Money Fund, if any of the properties in the portfolio were damaged or at risk, and the short answer is no. And part of the reason why is just simply, where the properties are located that we've made these loans, they weren't in these fire areas. But, looking back, comparing 2017 with the Tubbs fire and the current fires that we're seeing, across the state, it was interesting the number of structures, the stat. So in 2017, the Tubbs fire specifically, the one that took out Coffey Park, Fountain Grove, those areas of Santa Rosa and Napa and Sonoma counties, 36,000 acres burned in that Tubbs fire alone, and 5,600 properties, structures were damaged or destroyed. Now today, there's 100 times more acreage burned, so 3.6 million acres. Oof. But only 6,700 structures were destroyed. So
a lot of brush.
It's much more wilderness that's burned this year compared to the Tubbs fire. That's still a tremendous loss, especially the acreage and the number of structures. But these haven't luckily hit in densely populated areas. So October though is when the Tubbs fire hit in 2017. We're not even in October yet. So, we're not out of the woods, hate to use that term. But we still have a month of fire season ahead of us. And so we're, hopeful that we get some wet weather coming our way soon. But just wanted to answer that question.
All right, guys, coming to the third trivia question. This one's a little harder. What sport is the focus of the movie Over the Top? I don't know if you ever saw the movie. No, Nam's got shaking his head yes. All right, call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. Stay with us. The Best of Investing is going to be right back. Welcome back to the Best of Investing. Edward Brown here along with Mark Hunt and Nam Phan of Pacific Private Money. Third trivia question. What sport is the focus of the movie Over the Top? Mr. Phan.
Yeah, arm wrestling.
Arm wrestling. Very good. I'm impressed. So Nam, why don't you give us a deal of the week? We gotta have like this music, deal of the week. Anyway, go ahead.
Just do that, Edward. That's good enough, right? So this week, a couple deals of the week, and we started out the segment. We started out the show talking about how we're in another spring market, and these two deals of the week are sort of related to that. So again, they're bridge loans, but we have people move. Well, it ties into bridge loans. It ties into the migration we're seeing, people moving out of the city, and also just the number of people who have, especially boomers, who have a lot of equity in their homes and are downsizing. So this one tackles or addresses all three. This is a borrower who came to us, who owns a home in San Francisco. They have a ton of equity in it, and they want to downsize into into El Dorado Hills. Okay. So they want to move out of San Francisco, major metro area, get more open space, get a bigger property, and they want to be able to buy before they sell. So this is normally something we see a lot of in the spring, and we continue to see it heading into the fall, where we were able to do a bridge loan for $857,000. in this case, the property value is $829. So we're doing over 100% financing.
Okay.
But because they have so much equity in their departing residents, we're able to do over 100% financing, still have a combined loan to value in the low 70s.
Wow.
And what this person will do once they sell their San Francisco residence is they're going to pay us off completely. They won't need a mortgage. So that's the first one. Again, San Francisco moving to, the Sierra foothills, plenty of equity, and they want to buy before they sell. The second one, sadly though, is sort of sad reason, a couple getting a divorce. But the good news is it was amicable, and essentially they wanted a bridge loan so that one of the spouses would be able to buy their next home before they sold the house that they would be mutually selling as part of the divorce. And so, these bridge loans are really allowing people to unlock equity in their existing home without having to sell it first. And I can't stress enough in this market, if you're looking to downsize, buy your next home, you haven't sold your existing home yet, you're going to be at a competitive disadvantage if you're making a sale contingent offer, because you're competing against other people who may be all cash, or there's no sale contingency or even a loan contingency. So if you want to learn more about our bridge loans, give us a call at 415-883-2150, or you can actually apply through our website at www.pacificprivatemoney.com. And we're really good at bridge loans. We do so many of them, and we're here to help.
Great. Mark, what else do you want to cover today?
Well, just let's go into a little bit more detail on some of our newer funds. We did a webinar earlier this month that is available to watch. There's a link on our website, right, that we can go to?
They can go to the events page, and I believe if they fill out the form, we can send them the link.
That's right. We want to capture their contact information. Not that we'll harass you, because we actually don't send out a lot of spammy emails. We're actually pretty good that way, but we do need to qualify investors before they can work with us. We're a company like many that we're only allowed to take money from accredited investors, so you do have to qualify to invest in funds such as ours. But I did mention in the last segment that we do have 4 ways to invest in a mortgage fund, and they're each different and unique in their own right. And the one that we've talked about most on this show over the years is our legacy fund, which we call the Pacific Private Money Fund, and that one's paying a yield year over year around the high 7s. We may close out this year at 8%, depending on a couple of property sales. We have an REO in the portfolio that we think we're going to sell for a nice profit. Don't get many of those, but when we do, they're usually really nice for the fund. But we do have some great loans in the fund that are producing yields for us, for our investors in the high 7s. Then we've got something called the Freedom Fund, and that is a unique fund in that it acts like a money market account for investors, in that it has a higher minimum. The minimum investment's $250,000, whereas only $50,000 in the Pacific Private Money Fund. The Freedom Fund, it's $250 or above, and it's meant for our high net worth investors who have liquidity from time to time that they'd like to earn from if they could, but they don't want to lock it up. So we don't enforce a lockup in the Freedom Fund. You could put it in and take it out, although we do ask for a 30-day redemption request, but we can normally accommodate within a week or two in a redemption request in the Freedom Fund. And fairly unique, and again, for more information, we have flyers that provide detail, and of course we've got offering documents on all 4 of these funds, which spell out in great detail how each of these work. So the first fund, Pacific Private Money Fund, it's a kind of a traditional hard money fund, mostly single family residential loans in there, mostly 12 to 24 months in term, and it's paying in the high 7s. The Freedom Fund, we pay a flat 7% to basically rent your money from you, and you can take it out with no redemption penalty and no no enforced lockup period. The third fund is a fund we call the North Star Fund, the North Star Capital Fund, and that is a fund that makes construction loans. So the portfolio of loans in that fund are California construction loans. Those loans pay a higher yield. They're harder to manage, and we've got a very highly skilled management team for those construction loans. And we pay, we've got a pref of 8% on that one, and with a target yield between 10 and 12%. And then last but not least, we've got the Pacific Southwest Note Fund, which is a highly unique fund. That fund purchases existing notes. It doesn't originate its own loans. It purchases existing seller carryback notes, and the vast majority of those notes right now are in Texas, and we buy those at a discount. And because of the discount we're able to purchase, and these are performing loans, these are not non-performing loans, because you'll see funds available nationwide that specialize in purchasing non-performing loans. Our loans are performing loans, and yet we're able to produce target yields, where our target yields are in the anywhere from 10 to 12% on that fund, with a preferred return of 9%. So this is a Texas-based fund, which is helpful for those who have out-of-state addresses and would prefer not to pay California state taxes. So there's a number of benefits to this particular fund. So those are our 4 funds. They're each unique and have a different attraction to them, a different risk-reward ratio. For more information, you want to go to pacificprivatemoney.com, or just give us a call and we will shoot you our 5-page summary that has a summary page of all 4 funds, and then each of the 4 funds has its own kind of one sheet. And then if you want further information, of course, we've got offering documents that we're able to provide for you. So pacificprivatemoney.com, or call us at 415-883-2150.
Perfect. All right, we're going to cut to our last commercial break. No trivia question, but stay with us. The Best of Investing will have some very interesting comments when we come back. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and Nam Phan of Pacific Private Money. No trivia question, but Nam, why don't you give us a summary of how the funds work with regard to fees and how investor friendly it is?
Yeah, so all of the funds are really similar in certain ways, and one of them is what you just mentioned. When you invest with us, people always ask, what does it cost to invest in the fund? And the answer for, generally, previously it was for the Pacific Private Money Fund, and Mark just gave a sign for those people watching us online, the big donut, which is zero. It doesn't cost anything to invest in any of the funds. And then the next question people ask is, when I redeem, what does it cost to redeem my funds? Is there a load going in or out? And the answer to that is also zero, so long as you keep your funds in for a minimum of 12 months. That's the lockup period. Another question people ask, and I think Mark mentioned this in the last segment, is you do need to be accredited. The nice thing is you only have to go through the accreditation process once, and that certification is good for all of our funds. So you sign up, you go through Get Accredited, which you can do online. There's companies that we use like verifyinvestor.com, or we provide a letter that you have your CPA, financial advisor, or an attorney to fill it out, stating that they've looked at your financials and can attest that you're accredited. We keep that on file, and whether you originally invest in the Pacific Private Money Fund or any of the other ones, if you then want to invest in any of the other funds, you don't need to go through that process again. So it makes it really convenient, and we have quite a few investors who, since we've launched the 3 other funds, have invested across multiple, 2, 3, actually I think we have one person who is maybe in all 4 of our funds now. So it's been great, but essentially those are the main characteristics. $50,000 to invest in the Pacific Private Money Fund, that's the minimum. $100,000 for the North Star Capital Fund. For the Pacific Freedom Fund, it's $250,000, and for the Pacific Southwest Note Fund, it's $50,000. So we're seeing incredible interest in these alternative investments in the last 2 months, I spent so much time speaking with investors and educating them on the different characteristics of the funds. But the common question, or the question I asked them, and the common answer they give to why they're investing now is, they feel like the stock market is at a peak in many cases, or they just want to pull money out of the stock market and park it in something that's a little bit more, much less volatile. With everything going on, that they want to park it in one of these funds or several of them to see what happens over the next, several months, several quarters into 2021.
Yeah, most people who invest with us just keep adding money. Actually, very few redeem. We've
Yeah.
been very fortunate that we've got a high retention and a high interest in expanding and diversifying across multiple funds. So again, for more information, go to pacificprivatemoney.com or call us and talk to anyone in our office. We're happy to give you more information and fill you in and answer your questions. 415-883-2150.
The best part about this is no losses for any clients.
Yeah.
So I like that. All right, guys, just going to cut out. Here's our thoughts for the day. It's better to look back on life and say, I can't believe I did that, than to look back and say, I wish I did that. Not the truth. And the brain is the most outstanding organ. It works for 24 hours a day, 365 days, right from your birth until you fall in love. Ain't that the truth? All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.